it going. So good morning, everyone, to Market Insights. This is Landmark Title's monthly webinar where we bring you not just the market stats, we bring you the inside edition of those market stats. We are joined today with Scott Kiburz. He is the Vice ARMLS Chair. He is the one that not only collects all of these amazing stats for us, but he is also the one that delves deep into the meaning of these stats and what they really mean for your real estate business. With that being said, Scott, go ahead, take it away.
Let's get to work. My first question for the people on the line today, if you've attended 3 or more of these monthly reports, would you give a shout out, raise your hand? Because we're going to take a different approach today because the numbers are moving. And if you've watched the trend up the last 7-8 months, we're going to see a pretty consistent upward movement. But as we get into today, we are going to see some leveling. And I just want to be cautious and aware and know we're going to track this really heavy in the next 30, 60, 90 days. Sarah, if you'll advance the first slide, we'll get started on the fast facts, ladies and gentlemen. When we ran this report on the very first of the month, we had 3563 active listings in Maricopa County. The 10,595 closed, that is all of MLS. Everything in the MLS was 10,595. In Maricopa County only, it was 15% less at 8938. And we had an absorption rate of 175%, which is just unbelievable. But please know it's peaked way north of 200%. We had 764 coming soon, which is about 18% new listings in the coming soon slot. So if you're working with buyers, please always check the coming soon for inventory that's about to go to market. Know that you can do showings, know that you can write offers on a coming soon property. Interest rates right now, 2.75 to 3.5. Investors are running a little like probably in the low 4s if you're an investor and need a loan. Average sale price 507, 716. If we stopped right there, that is a pretty good awareness of the market of the moment in Maricopa County. Sarah, if you would for me, please. We're gonna have a few commentary slides here. Go ahead. Please, ladies and gentlemen, just breathe into this. A fundamental building block for building a business. Figure out what the market is and adapt to that. Don't force your market to change you. Don't let the market be forced to change you. And then in the real estate world, we're moving slow. Sometimes people, we're losing so slowly, we think we're still winning. So what I'm trying to say with that quote that came to me is analyze your business, analyze your expenses, analyze your return. Where are you making the most profit? How are you getting a return from your marketing dollars, your social media dollars? Because with all this change, a percent here, a percent there can whittle away your profitability. Next slide, Sarah. Ladies and gentlemen, if we have time, after we get through the main slides, there's a back-end report at the end of this called How to Lose $1 Billion in Real Estate. And it's a summary of a recent video training. And what's coming about in our market, ladies and gentlemen, for all the realtors out there, is generating revenue more than just from the commissions of buying, selling real estate. If there's relationships you have with title, with lending, and other ways to generate revenue out of the transaction, is the market of the moment. And that's what all the big businesses are doing. That's what a lot of corporate America is doing. And validating one more time, the industry is moving very slow. Our real estate inventory or industry is moving very, very slow, yet it has never moved faster. So if you've been in the business 20 years, you feel like you might be on a whirlwind. If you're in corporate America, in some other industry, it's moving slow. Just data points. Sarah? Okay, this was as this speaker was talking about How to Lose $1 Billion in Real Estate, he anchored his presentation with this phrase: agents are being replaced. And so your mind takes off and you think, oh, technology with other industries, something, something, something. And then he said, next slide, Sarah, by other agents. And the point that he was making, and I want to revalidate that point, is staying up on your game, learning, understanding the market of the moment, being deeper in relationships with your buyers and sellers than you've ever been. Because if not, there are other agents that will be replacing you. If you're doing your business the same way you did 3 or 4 years ago, it has changed so dramatically. You have to move with the change. Otherwise, you'll be replaced. Sarah? So July 1st, we had 4,306 active listings, 7,670 solds, and 9,509 under contract. That is on the 1st of July. That is a true statement. What's exciting about this slide is this. We're north of 4,000 active listings. Oh my gosh, it's been a long time since we've been at 4,000 and stayed. Next slide, Sarah. July 1st, here's where we're going to start to watch the trends, ladies and gentlemen, and our time together today is going to be a little bit more explanation and questions to validate from the people in the audience. So if you look at on the left slide, the median sale price, average sale price, you're seeing an arc, not an ascend, right? It's still going up, but it's not going up at the same pace that it had in January, February, and March. So I want you to visually see that. That's number one. Then the right slide, price per square foot, it goes back 2 years to July of 2019, and you can see the trend, especially the last 8 months, where it looks like it's gone up, up, up like a stair step. And that is all of Maricopa County moving up. When you get to the very last 2 red bars, the ascent is not quite as fast. That's the point I want to drive to that. So when you see something like that, now you're starting to ask questions in the data to see where that lies. Sarah, let's go find it. Okay, so on July 1st, we had an absorption rate of 174%. That was down from, we hit 260 back in March. So not that's even possible, but when you only have a half a month of inventory, you can have an absorption rate of 174%. Sarah? Now, here, this one graph here, ladies and gentlemen, if you were taking this to your buyer or seller, it tells a great story. In the blue, there's five numbers, numeric, bold blue: active, under contract, sold, new listings, and average days on market. That is all of Maricopa County. That's the total number of actives. But when you look right below 4,306, you're going to see in the last month, our active listings are up 14%. That's a true story, and that's a significant number. And we had the lowest inventory about 30 days ago, and at 4,306, our inventory is up 42% as a percent. It's way up. We did dip south of 3,000 a couple times. So we've got a 42% increase in inventory compared to the last 30 days. Now, I've said this before, ladies and gentlemen, when you slide over to sold at 7547, I always compare that to the new listings, 8925. Our new listings are only up 6% and 5% in the last 3 months, but in the last 6 months, our new listings are up 57%. And as long as we still have new listings at 8925 above solds, the net is we're starting to churn out of the very low inventory at a rate of about 350 doors for the month, basically. Let's keep going, Sarah. Okay, this is where we found the needle in a haystack, ladies and gentlemen. This is active listings. I'm sorry, under contract listings. So what happens is, I'm making these numbers up. I have a $400,000 home and I sell it for $425,000. The average and median sale price averaged together is going to be ascending. ARMLS is not going to report the under contract price of a home, but for a long time, it's been a steady charge going way back to June of 2029. It's been a slow but gradual ascent. in the last 2 months, there has been a downward movement in under contract. This downward movement you're looking at right now in the black and the reddish orange slide line, that's going to show up in August. Does this make sense? And this is where I would ask the audience to jump in and say, have you seen this? Are you witnessing this? Can you validate this? Can we pause here, Sarah? And if there's anybody who wants to just jump in and chat or do anything, I'm looking for validation, please. Live question to the audience. No takers.
Look, well, we got one hand raised, Scott.
Okay.
So somebody else has seen it.
All right, fantastic. All right. Sarah, let's go on and dig a little deeper, please. All right, so now if I just look at sold volume, if I look at active and sold and stop, you're seeing the ascent. And if that's all you're looking at, you're still going to be paying overpriced for properties. You're still going to have sellers who want even more for their seller property, selling property. It's in that previous slide under contract where we're seeing the arc. Sarah, next slide. So this is when we went to, now, yeah, go ahead. This is purposely blank. So I ran this same report on July 6th, and that's a pretty short insertion, but we saw the downward trend in the beginning of July. So I looked hard again at it just a couple days ago. And this is the active listing price, okay? And you're seeing a leveling there. Yes, to the audience? Yes. Keep going, Sarah. We're also seeing a leveling in the under contract, and now it's doubling down. Look in the gray bottom, average sale price per square foot and median sale price. Go back 90 days. We were at 244 and 64. We ascended to 255, and currently we're down a couple $3 to 250, 252.61.
Then what are you doing? Come here.
Okay.
No, I don't want to use it.
Humans, you get angry. I can't help it.
Is that me? Okay.
No, that's somebody else that used your Zoom link, Scott.
I
So we've
apologize.
got them on mute. If they could take off their camera too, that would be awesome.
Thank you. Okay, so now this is what I want you to look at is the black and orange line, and look at the leveling of pricing per square foot. And please make a mental note, 252.62 is the average right now. Let's keep going, Sarah. So what we're seeing here, if we go back to the current year, if we go back to the average, I'm at the bottom of the page, by the way, average dollar per square foot at the beginning of the year, January, we're at 236. We've ascended to 256, and we're holding at 256. And so if we stop right here, look at the under contract, we're going to see that we're still ascending. Okay, but at the under contract is the one that's making a difference. Last but not least, we wanted to ask one more question. Go ahead, Sarah. Paradise Valley, ladies and gentlemen, is up 39.9% for the year in the last 12 months. And those numbers, it's the most affluent zip code in our state. And when they're up almost 40%, it's pulling all of Maricopa County up. So Sarah, for the next slide, if you would for me. I'm sorry, back up too, I apologize. If you can back up, Sarah. Okay, so ladies and gentlemen, I put a blank slide here, but I removed the town of Paradise Valley from these numbers. There are 40 cities that we pull in Maricopa County. I removed Paradise Valley and or the zip code 85253. Now I want to make the introduction to the next 3 slides. So when you pull PV out, our average sale price is 298, up from 294 in the last 30 days. You're starting to see still the leveling. Sarah, next slide. We're seeing the leveling yet again. Here's the point, ladies and gentlemen. It's about $3.50 lower per square foot, all of Maricopa County. And we're seeing the leveling of home prices right there. That's the takeaway of today's conversation. There appears to be a strong leveling in the first 30, 60, approaching 90 days. Next slide. And then also, if you're just looking at sold and you stop there, if you look at quarter year to date and average and month to date, we're in the same quarter and month. This is July, and it's 253. But year to date, we're up $20 a square foot. All cities combined minus Paradise Valley. Sarah, boy, that's the heavy lifting of the day right there. I hope that made sense to the people in the audience. Here are the numbers. We're at 4532 active listings. We're holding in the 4,000s. Next slide. Now, ladies and gentlemen, sold to list ratio. We showed this slide earlier and it was a slight bend. But when we ran this report on the 6th, you're seeing a downward trend off the 100%. That is the pause, that is the leveling, that is the awareness we want to bring to your audience today. Nobody wants to catch falling glass. I'm not saying the world is falling. I'm saying today there's a leveling happening out there. Sarah? Okay, we ran this report on the 1st. We had 174% absorption rate. On the 6th, we had 190% absorption rate. So that's a strike point on that day. And there was a little bit movement. We're starting to burn inventory a little bit faster than we did over, say, the 4th of July holiday. Sarah? Okay, so now what we have here is where we get into a little bit of a tradition with all of Maricopa County. We'll spend a little time here. In the blue dot, the active listings, they're down 36%. If you go back a year ago, we had 6796 inventory. Again, we hit sub 3,000 a couple times, and we're currently at 4,306 active listings. So hey, we're only down 36%. If we can keep climbing another 300-500 doors a month, we're going to start to feel the climb out of this low inventory. Overall, all of Maricopa County in yellow is up 33%. For the people who bought in the last year or two, boy, did they time that right. Sarah? I wanted to insert rentals in here one more time. Again, not all rentals are in our MLS, but those are up 21.8%. So anybody working with investors, have their own personal rental property, just know rents are ascending. You got 1,000 square foot door. On average, it's renting for $1,340 a month. And then if you pull into the interior part of the metro, those numbers are much, much higher. Sarah? So now we're starting here with 18 cities alphabetically, starting with Apache Junction. So in this case here in the blue dot, active listings are down 26%. Solds are up 2.5%, median square foot price, 33.5% for Apache Junction. They have 17 days on market. That market is still white hot, white hot. Sarah, we're going to go through these like this and make a high point about most of these. And then time permitting, if there's any questions, time permitting, if they want to learn about how to lose $1 billion in real estate, we can tee into that a little bit. El Mirage, I added in here. There was just 9 listings available in that. Solds are up, or solds are down 9%, but the median sale price, El Mirage, 37%, moving quickly. Sarah? Fountain Hills, actives are down 47%, and that market is 29%, 29.3% higher than it was a year ago. Gilbert, 36%, next. Glendale, 33%, next. Goodyear, 34.5%. The market is moving very briskly. Litchfield Park, 37. That's only in around the west side, Avondale, etc. Town of Maricopa. Ladies and gentlemen, look at the 174.82 in yellow, the average sale price. That is $50, give or take, lower than if you're living in Maricopa County. But that market, people then start to drive until they can afford to buy something. And that market's up 40%, 40.8% in a year. Sarah? Mesa is up 27%. Month supply just 2 weeks. Sarah? Paradise Valley, I'm going to pause here for a little bit longer. Ladies and gentlemen, 39.9% appreciation in the most affluent zip code in our metro, in our state. It's at 529.68. You could have bought the same home on average for 378 a square foot a year ago. Not all homes in Paradise Valley are sold on a square foot. You know, there's a lot of lot value in there. But I point this out, ladies and gentlemen, because that number in that zip code city has been lifting all of Maricopa County. I just want to point that out. Here we go, Sarah. Peoria, I'm sorry, that's a duplicate. That is not Peoria. Phoenix, 241, it's 31%. This is always the bellwether for me. What's happening in Phoenix happens first. And it's 31%. Queen Creek's up 31%. Keep going. Santan, again, on the peripheral down south. It's up 44% from a year ago. 92 listings. It's up from $1.40 to $2.02. Significant changes in Santan. Scottsdale, significant change, 32% increase, and it's at $333 a square foot. Holy cow. Surprise, 35% increase, just 16 days on market. Significant change. Tempe is up 29.6% in the last 12 months, just 14 days on market and 0.62 weeks of supply. Landlocked town in and around ASU. Tolleson, again, 30% increase. I think that might be the last city, Sarah. Tonopah, forgive me, 33%. Days on market, just nine days on market. 22 listings in all of Tonopah. It's up 33% from 116 to 155. Wow. Sarah, we have about 8 minutes according to my watch. Is that right? Can you hear me, Sarah?
That's correct, Scott. We got about 7 or 8 minutes.
So, ladies and gentlemen, if you want to just see what's happening on the other side of the world at a national stage, stay on. If you're just looking at the local stats, jump off. But let's go through a few slides here, Sarah, and we'll see if we can get through this. So, what this is looking at is a couple different stock prices. So, Realogy is one, and it's just showing the last, probably 2013 stock price up and down through the pandemic. And then it throws in EXP and Compass as well. But just know there's a lot of movement in real estate brokerage stock price. Number two, go ahead, Sarah. Zillow and Open Door have somewhere around 10% in the markets they play in and 3% in the markets they play in for Zillow. And those are working with their iBuyer products. And that's significant. Go ahead. So when builders are building new homes, a lot of times they want you to use their preferred lender. And what this slide is illustrating that whatever builder that is, Toll Brothers, etc., about 75% of buyers, if they do get a mortgage, use the builder's lender due to incentives. And the industry average is 20%, and the goal for Zillow that they struck a claim on is 33%, that they wanted to get, for their iBuyer product, they wanted to get 33%. Again, this is going back to the early part of the conversation where there's more revenue than just the commissions to buy and sell a home. If we can get access to the lending part or title or something else. And this is Zillow's goal, is to get 33% of the people buying a Zillow home use their lender. Next slide. And what the industry has taught this group is that Open Door gets 2% and Zillow gets 1%. That it is an industry average of 20 is harder to get than other companies thought, right? There is great success in working with a lender who you know as your buyer agent, who can help the buyer and getting it closed on time, know what to expect, and have a relationship. And this is what's being validated. The point of the slide is today, those two companies.
Call from +19282252558.
I don't know what that is.
That was beautiful, Scott.
Here, if you can
Hold tight. Scott Kiburz is getting a call.
I turned off my phone. It's not me. Next slide. Sarah, if you would. There we go. Okay. So what this is talking about here is the amount of funding that has come into a company called Compass, and it's north of $1.4 billion total in throughout the years. This is the amount of venture capital funding that's come in. and that's a lot of money. Go ahead, Sarah. This is Compass net loss per year in the millions. Data point there. Sarah. This is an interesting slide. This is all of Realogy with their combined companies, just over 300,000 active transactions. And these are some other companies that have played in that space. And they pointed out EXP, Redfin, and Compass. They're more tech-centric companies. And there's a lot of venture capital behind them, and they've moved up. And this is 2018. So if we go to the next slide. This is 2019 as they're ascending. And the next slide, this is 2020. And you see some of those companies have moved up. They've spent a lot of money in technology, and they've grown, and they've also lost money. And that's, I'm not saying this is good, bad, or indifferent. I'm just saying this is the state of the company. All the while, Realogy has been pretty consistent in where they've landed. And yet their market cap has gone down since 2018. And that's the point of the previous speaker's message. So everything is moving and changing and evolving. Sarah? Make an impact. That's the point of this whole story. So the industry is changing faster than it ever has, yet it's still moving slowly. And right now in our local market, the summary is we're seeing a leveling. Stay close to that. All the people out there in Landmark world, thanks for the great job you do for all of us and the industry. And I think you've got some exciting news about Christmas in July, if I'm not mistaken. Sarah?
Yes, Scott, that we do. We are partnering up this holiday season coming up with HELP, which is a nonprofit organization, the Homeless Engagement Lift Partnership, to adopt families through the holiday season. We did this last holiday season at each of our individual offices, and it was absolutely wonderful. So we're putting together information. We're getting a good head start because it's July, right? So if you would like more information about how to partner up with HELP and our Landmark Title offices, we do have 6 of them across the valley. 7 soon to be our Goodyear location as well. So we would love to have your participation with us this holiday season in giving back, because we are in such an amazing industry. We have been given so much that we work very hard for it, that it's great to share when we can. So if you'd like more information, that's going to be forthcoming as well. Scott, we did have one question in the Q&A. It was about the slides minus Paradise Valley. So the first set of graphs that we covered early, that was everything including Paradise Valley. Correct. And then the second set of graphs had Paradise Valley taken out, correct?
So yes, so that's why I put that blank in there and I said removed PV. I wanted to make that dramatic, like this does not include Paradise Valley.
Yes, yep. Which, yeah, that was a huge, huge impact. So if anybody has any other questions for Scott, please let us know. He always does such a good job covering everything. These slides will also be available, as well as this recording, as well as the market snapshots of the particular cities. So if you would like any of this for your clients, for your personal marketing, please reach out to our business development managers. They are happy to assist you with any of the stats, facts, figures that we covered today. If there's something you didn't see today, please reach out to them, let them know. We can get you. Yes, we can get you, Anthem. We have got you covered. Reach out to your business development manager. They can put in a request and we'll get that to you as well. So thank you to Beth, Becky, Melinda, Mary, Zach, Patty, Michael, and Jessica down there in the corner. She's totally there. Yeah, there she is. Thank you so much for everything y'all do. Like I said, if you would like to use some of this information for your clients, you should be wanting to use some of this information for your clients. please reach out to them and we will get you the information. And of course, thank you as always to Scott Kiburz. This is great information. It's very powerful, especially in our slightly unhealthy market.
Just a leveling.
The leveling market. I like that, Scott. But it is really important when you go out there and you're working with your clients to have this information on hand. You want to be the realtor in the know, as always, or else, like Scott said at the beginning of the presentation, if it's not you, it's going to be another agent. So make sure that you are that agent. And we love bringing you the information that you need to be that agent. So thank you, like I said, to Scott, and thank you always to Landmark Title for allowing us to bring you the monthly market insights, bringing you all the information. As always, a reminder, we have 6 offices across the valley to service all of your escrow and title needs. So please think of Landmark Title on your next contract. Whether you're working with buyers or sellers, give it a shot. You can never go wrong using Landmark Title. So with that being said, thank you all for joining us. I hope you guys have an awesome July, and I can't wait to see where our market is next month, Scott.
Thanks, Sarah. Bye, everybody. Thank you.